Welcome to The Bid, where we break down what's happening in the markets and explore the forces changing the economy and finance. I'm your host, Oscar Polito. We're introducing our new weekly short-form series from the BlackRock Investment Institute called Market Take. Market Take is a quick digest of what's driving markets and was available as its own podcast where you can subscribe. You'll be able to hear the first 3 episodes right here on The Bid for the next few weeks on Mondays. Subscribe to Market Take wherever you get your podcasts.
What's driving markets? Welcome to Market Take. Each week we'll bring you our insights on the latest market and economic trends impacting investments. I'm your host, Jean Boivin, head of the BlackRock Investment Institute. This week I'll be discussing an apparent disconnect in the economy. How can inflation appear to be falling quickly back to 2%, and yet the US economy be stronger than expected at the same time? And what does that mean for central bank policy, in particular for the Fed this week? The surprising fall in June US core CPI inflation was clearly good economic news. As we've seen throughout this year, these can fuel a bullish market tone for some time. Treasury yields slid and stocks climbed after the CPI data on hopes growth would hold up and inflation come down. But the soft landing hopes still needs to confront an important disconnect. How can inflation be falling rapidly to 2% if at the same time the economy is strong, even stronger than expected? There's a perception that growth is strong, but the reality is that the US economy has barely grown over the last 18 months, and that is despite historically tight labor markets and strong consumption. The inflation story is also more complex. We are seeing the combination of 1, a shift in consumer spending from goods to services, and 2, the pressures from the tight labor market. The first is finally spurring the expected goods deflation. Yet, the flip side is persistent services inflation exacerbated by ongoing wages pressure from the labor market tightness. The result of all this is a roller coaster trajectory over the next quarters for inflation before it likely settles closer to 3%. Companies are already facing higher production costs while margins have dropped, suggesting they are losing their ability to pass on higher costs to consumers. Perhaps the US avoids a recession and experiences instead a longer stretch of weak growth. But if inflation falls anyway amid higher wages, that will pressure economy-wide profit. We are closely watching the current second quarter earnings seasons for signs of pressures on earnings and margins. The broader point is this: bullish news on the economy does not necessarily equate sustained bullish news for broad markets. And this is why we're pivoting to new opportunities and harnessing mega forces. Soft inflation data has rekindled hopes for rate cuts in 2024, even as central banks are to hike again this week as they remain in inflation-fighting mood. We see most developed market central banks forced to hold policy tight to lean against inflationary pressures as they focus on tight labor markets. This is a key theme of our mid-year outlook. So don't expect them to come to the rescue with the rate cuts when the economy turns softer or even contracts. That's the old playbook from the Great Moderation, that period of steady growth and inflation that ended with the pandemic. We use our new playbook to look beyond broad asset classes in this tricky macro environment. We tapped into the AI megaforce within developed market stocks. We upgrade UK equities to neutral as they better price in the weak growth outlook. We like Japanese stocks, US inflation-linked bonds, and prefer Euro area nominal government bonds over the US. For details, read our weekly market commentary. Go to www.blackrock.com/weekly-commentary. Thank you for tuning in. If you've enjoyed this episode, subscribe to Market Take wherever you get your podcasts.
This material is intended for informational purposes only and does not constitute investment advice, a recommendation, or an offer or solicitation to purchase or sell any securities, funds, or strategies to any person in any jurisdiction in which an offer, solicitation, purchase, or sale would be unlawful under the securities laws of such jurisdiction. The opinions expressed are as of the date of publication and are subject to change without notice. Reliance upon information in this material is at the sole discretion of the listener. Investing involves risks. BlackRock does and may seek to do business with companies covered in this podcast. As a result, listeners should be aware that the firm may have a conflict of interest that could affect the objectivity of this podcast. For more information, visit blackrock.com/thebid.